Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Good morning, everyone. I'm Alex.
And I'm Morgan.
And you are listening to Connecting the Dots, coming to you live from the studios of Snarful Solutions Group, right here in Sacramento, California.
It is Wednesday, January 28th, 2026.
We made it to the middle of the week.
We did. The end of January is staring us right in the face. It feels like we just toast the new year, and now, well, we're almost a full month down.
Time flies when you're watching the world change. But speaking of things changing, if you're looking out your window this morning, depending on where you are, it might look a little frightful.
Oh, yeah.
We are looking at the national weather maps, and wow, there is a serious Arctic blast moving through the plains and the Great Lakes right now.
It looks intense. We're seeing reports that this could be the longest duration cold snap in several decades for those regions.
And it's not just staying in the middle of the country, it's barreling toward the East Coast.
By the weekend, yeah.
And they're tracking a potential winter storm, too.
Yeah.
So, if you're tuning in from out east or up north, please bundle up. Keep the pets inside.
Stay safe. Meanwhile, here in Sacramento, look, I don't want to be the person who rubs it in, but we have to report the local news.
Go ahead, say it. We can take it.
We started with some classic morning fog, but it's turning into a partly sunny day with a high of 58 degrees.
It's officially sweater weather, but the nice kind.
The coffee on the patio kind.
Right, not the survival gear kind.
Exactly. Before we get into today's analysis, let's do a quick pulse check on the markets. The Morningstar market update is in.
Okay.
The Dow closed yesterday at 49,040.88. It was just barely up, about 0.03%.
And the S&P was basically flat, down a tiny fraction to close at 6,999.02.
Wow, it is literally knocking on the door of 7,000.
It really feels like the market is holding its breath a little bit, waiting for the next big signal.
But you know who isn't holding their breath? The crypto market.
Mm-hmm.
Bitcoin is still on a tear, trading up this morning at $89,694.50.
It feels like 90K is just inevitable at this point.
It's certainly at the momentum.
Now, before we connect the dots on today's stories, and we have a huge topic today, really about the literal plumbing of the future, we have to thank the fuel that keeps this show running.
I am, of course, talking about strong coffee.
You know, I was the biggest skeptic about instant coffee for years. I thought it was just for camping or, I don't know, emergencies.
Me too. But this stuff is legitimately different. It's premium instant coffee, but it tastes like a traditional brew you'd get at a cafe.
But here's the kicker. It's functional.
Mm-hmm.
It's packed with 15 grams of protein, MCTs, and adaptogens like ashwagandha.
Which is huge because you get that clean, sustained energy without the jitters.
Or the crash later in the morning. It's brain food, really.
Exactly. If you want to upgrade your morning routine, head over to strongcoffeecompany.com and use the promo code SNARFUL. That's SNARFUL for 20% off your entire purchase.
Definitely worth checking out.
All right, let's get into it. We've gone through the Morningstar report, and we've pulled out 3 stories that, well, they might seem separate at first glance: chips, crypto, and batteries.
But when you layer them on top of each other, they tell a single massive story.
It's really a story about infrastructure.
But not the kind we usually talk about. Not roads and bridges.
No. This is the infrastructure of the artificial intelligence age. We're talking about the back end.
The physical chips that do the thinking, the financial rails that move the money.
And the power grid that keeps the lights on. We're watching the world literally restructure itself to support this new technology.
And we have to start with a big one. The machine maker.
ASML.
Dutch chip equipment. Giant. ASML just dropped their Q4 numbers and said, I mean, surprising doesn't quite cover it.
No, earth-shattering might be closer. ASML shattered records. They reported bookings of 13.2 billion euros in the fourth quarter.
Okay, so let's put that in context. What were the analysts expecting?
They were estimating around 6.3 billion.
So they didn't just beat estimates.
They more than doubled them.
Yeah.
In the financial world, for a company of this size, I mean, this is a massive industrial titan. To miss the estimate on the upside by that much is almost unheard of.
That is a signal if I've ever heard one. But why? What exactly are people buying?
That is the most critical detail. More than half of those bookings, 7.4 billion euros worth, were for EUV machines.
EUV, extreme ultraviolet lithography. Let's break that down for a second. We hear that acronym a lot, but what are these machines actually doing?
Think of them as the most expensive, complex printers in existence. They use light with an incredibly short wavelength, extreme ultraviolet, to print patterns onto silicon wafers.
And these patterns are so small they're measured in nanometers.
Right. You simply cannot build the cutting-edge processors that run AI, like the ones NVIDIA designs, without these specific machines.
So ASML is the bottleneck.
They are the only toll booth on the highway to the future. If you want to play in the AI space, you have to pay the toll.
So who's writing these massive checks?
Everyone who wants to stay alive in this industry, TSMC, Samsung, Micron, they're all racing to expand capacity because their clients, Microsoft, Meta, Google, are just screaming for more computing power.
I saw a quote in the report from NVIDIA's CEO, Jensen Huang. He called this data center expansion the largest infrastructure project in human history.
And he's not exaggerating. We're talking about trillions of dollars in investment. ASML is sitting right at the supply point of that funnel.
But here's where the story gets a little weird. They're posting record numbers, the stock is surging, and yet they announced job cuts.
It does seem contradictory on the surface, doesn't it? They announced they're cutting about 1,700 jobs.
Which is roughly 4% of their workforce.
So why? If you're doubling your orders, don't you need all hands on deck?
Well, it's about the type of hands. The CEO, Christophe Fouquet, was pretty clear about this. He said the organization has become too complex.
Bureaucracy.
Exactly, it's slowing down innovation. So they're trimming management and administrative layers to refocus specifically on engineering and R&D.
So less paperwork, more physics.
Precisely. They want to be agile. When you're trying to keep up with the largest infrastructure project in history, you can't be bogged down in meetings about meetings.
There's another nuance here regarding China. We talk about the AI boom, but the geopolitical side of chips is just as big.
It is. The report notes that sales to China are expected to drop significantly. In 2025, China was a huge chunk of their market, about 36%.
And by 2026?
They expect that to fall to 20%.
Because of the export restrictions?
Right. The U.S. and its allies have clamped down. ASML can't sell their best stuff, those EUV machines, to China.
One last thing on ASML, and this is kind of a mic drop moment from them.
Oh, yeah.
They said they're going to stop reporting quarterly bookings after this.
Yeah, they're going out with a bang. Their argument is that the quarterly numbers cause too much volatility and don't reflect the long-term reality of their business.
It's a massive flex. It's basically saying, we're building the infrastructure of the next century. Stop obsessing over every 3 months.
Exactly. It shows incredible confidence.
So that's the physical layer, the chips. Now let's move to the financial layer. We're talking about Tether.
The biggest stablecoin issuer in the world.
And historically, let's be honest, they've been the offshore guys.
The cowboys.
Right. There has always been this air of mystery around them. But today's story is about them coming home. Tether has officially launched USAT.
This is a massive shift in strategy. USA is a U.S.-regulated stablecoin designed specifically for the American market.
So how is this different from their normal USDT that everyone knows?
It's all about the regulatory wrapper.
Yeah.
USA is issued by Anchorage Digital Bank, which is a federally chartered.
Okay.
And the reserves, the money backing the token, are custodied by Cantor Fitzgerald.
And this is happening under the Genius Act.
Right, the Genius Act. This is the new legislation that requires stablecoins to have full reserve backing and bank or qualified issuer status if they want to operate in the U.S.
So Tether is basically putting on a suit and tie.
They are. They appointed Bo Hines, the former executive director of the White House Crypto Council, as the CEO of this new entity.
That's a serious move.
It's a very clear play to compete with Circle's USDC, which has dominated the regulated U.S. market for a long time.
And it's already live, right?
Yes. Trading on Kraken, Crypto.com, OKX, MoonPay. They are not waiting around.
You know, when we talk about Tether, I think people forget just how much money we are talking about. I saw a stat in the report that blew my mind.
The treasuries.
Yes. Tether is the world's 17th largest holder of U.S. treasuries.
It's staggering. Think about that. They hold more U.S. debt than Germany, more than South Korea, more than Australia.
That is wild. A crypto company holding more U.S. debt than major industrialized nations. Why does that matter for the average person?
It matters because it integrates crypto into the stability of the U.S. dollar. If you're the U.S. government, you actually want people buying your debt.
And Tether is a massive whale in that market.
A massive whale in both the crypto market and the traditional bond market. They hold about $8.6 billion in Bitcoin, too.
So by launching USAT, they're trying to cement that position inside the U.S. regulatory fence.
It's a smart move. If the U.S. wants to maintain the dollar's dominance, they need regulated stablecoins. Tether saying, okay, we have the capital, we have the network, and now we'll play by your rules. Just let us in.
It's legitimizing the financial rails. So we have the chips from ASML, we have the digital money from Tether, but none of this works without electricity.
And that brings us to our third story. Redwood Materials.
This connects everything back together. We've been talking about how AI requires these massive data centers.
Well, those data centers are incredibly thirsty for electricity.
And Redwood Materials, founded by J.B. Straubel, the guy who helped found Tesla, is stepping in. They just raised $425 million.
Pushing their valuation over $6 billion. But look at who invested.
I saw that. Google joined the round. And NVIDIA's venture arm is in there too.
That tells you everything. Why is Google investing in a battery recycling company?
Because Redwood isn't just about recycling anymore, they're pivoting.
Exactly. They're calling it Redwood Energy. See, traditionally, their pitch was, we take old batteries, break them down, and make new materials for EV batteries.
But now they're realizing there's a middle step.
They're taking EV batteries that aren't quite good enough for a car anymore. Maybe they've lost some range, but they aren't dead.
But still hold a lot of energy.
A ton. So Redwood is repurposing them into stationary storage units for data centers.
That makes so much sense. If you're running a massive AI server farm, you need backup power. You need grid stability.
Precisely. Storage is now essential infrastructure, to quote the company. They're aiming to deploy 20 gigawatt hours of grid storage by 2028.
That is a lot of power. But similar to ASML, there's a human cost to this pivot, isn't there?
There is. Redwood recently laid off about 5 to 6% of their staff.
Mostly in cathode engineering.
Yes. And that's significant. Cathode engineering is the chemistry of making new batteries. By cutting there, it shows they're shifting resources toward this storage business.
They're following the market demand. The EV market has cooled a bit, but the AI energy market is exploding.
It's the circle of life, but for batteries. It starts in a Tesla, drives for 10 years, gets retired, goes to a Google data center.
And then eventually Redwood recycles it back into raw lithium and nickel to start the process all over again.
It's fascinating how these three stories lock together. You can't have the AI boom without the ASML chip.
Can't have the global financial velocity without the stablecoins.
And you can't turn any of it on without the power and storage from companies like Redwood. It is a complete ecosystem being built in real time.
It really is. Now, before we wrap up, we have to mention our other sponsor who keeps us looking sharp.
Oh, absolutely. We're talking about Skoni.
Skoni, that's S-K-O-N-I. If you play golf, or honestly, if you just want incredibly comfortable, stylish shoes, you need to check them out.
I have a pair. They are game changers. I wear them to the office, then straight to the range.
And because you listen to the show, you can get a deal. Go to skoni.com and use promo code SNARFL at checkout.
That gets you 15% off the entire purchase.
15% off. Do it. Your feet will thank you.
They will.
So let's bring it home. We've covered a lot of ground. ASML bookings doubling, Tether entering the U.S. banking system, Redwood pivoting to power the AI grid. What's the big picture?
You know, we often talk about infrastructure and people think of concrete. They think of the Hoover Dam or the interstate highway system.
Right.
But what we saw today is the definition of modern infrastructure.
It's not just concrete anymore.
No. It's a $300 million lithography machine in a clean room in Taiwan. It's a digital token backed by treasury bills sitting in a U.S. bank. It's a recycled battery pack outside a data center.
It's the invisible backbone.
Exactly. And the scale of investment we're seeing tells me we are still in the very early innings of this transformation.
That's a great point. We get distracted by the chatbots and the image generators, but the real story is in the copper, the silicon, and the energy.
Always follow the plumbing.
Always follow the plumbing. I like that. That is something to chew on as you go about your Wednesday. Is your portfolio or your career aligned with the plumbing or just the faucet?
That's the question.
Well, that is all we have time for today. Thank you so much for tuning in and letting us be a part of your morning.
It's been a pleasure.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.